Well, we are watching Alphabet shares in after hours trading. The parent company of Google is under some pressure after it missed expectations when it comes to Google ad revenue. For more, let's bring in Rohit Kulkarni. He's managing director at Roth Capital Partners. Rohit, thanks so much for joining us this afternoon.
Hey, thanks for having me.
So, yeah, we're seeing quite the reaction in after hours there. And, you know, it's interesting coming into this, it was AI. Where are we going to see the AI payoff? But it seems as though all the attention is going to the advertising on Google search. It's, a key component, obviously, for Alphabet there. But what do you make of it?
I would say the expectations were high, and they were getting higher as the year progressed. Over the last 3-4 weeks, we have been hearing investors about essentially thinking that Google search and YouTube would exceed expectations. Just in isolation, this result is okay. It's not excellent, but it is okay. So it's an expectations miss. I would say search and YouTube are still resilient, trending in the right direction. And the biggest question mark here is where is Google around? They continue to keep talking about durably re-engineering their cost basis. We are still not seeing that yet. I think that's the bigger question with investors about Alphabet, whether they can durably reduce their operating expenses while increasing margins. The biggest miss here is in the margins, not so much in ads, but more on the margin side.
The biggest miss is in the margins. I'll have to dig that specific number up here, Rohit. But when it comes to the AI focus that we've heard so much about from, well, many of these tech companies recently, but Alphabet included, are you seeing anything in particular that really tells you the story about how its investment in AI is working for the company?
So far in the numbers, to be completely honest and objective, we are not yet seeing AI show up in the numbers as one would think that it would jump out and start showing up. Probably it's still a slow process. We are seeing innovations come through. We are seeing new products being launched. We see the Gemini being integrated across variety of Google platforms. So I think it's just a slow process. So perhaps these earnings will give investors a pause in terms of what to expect from AI on a standalone basis when it comes to big tech in the first half of 24. So that probably becomes a bigger question in the next 2-3 weeks, where just standalone AI, how does that show up in numbers? Perhaps it shows up in numbers in a delayed fashion. So there is some pause in the investment and the sentiment around AI. So perhaps that's there you have it. I said it. Okay.
Well, yeah, we'll watch out for that then, Rohit. When it comes to the cost cutting that you thought you might have seen some evidence of this time around, what sort of efforts might you have expected to see from Alphabet?
We knew that Alphabet has been slightly behind some of its big tech peers when it comes to efficiency gains, as we think Facebook did last year, as we think Amazon has done, to some extent Microsoft has done. Alphabet has been slightly behind the curve. They have done some efficiency related improvements, but also invested heavily in AI. So we aren't yet seeing that level of operating leverage that one would want or other peers would be reporting as the year progresses. So that's, and while the rhetoric from the management team has been that the company is focused on re-engineering their cost basis, while that has been something that has been reported, we are not yet seeing a dramatic change in the cost basis so far. So far being the keyword there. Hopefully in the next 6 months, we shall start to see that, but that's been the bigger disappointment right now. Then revenues, I think Google can fix those, but costs are harder to fix, in my opinion.
It is interesting to be sort of at this point where there are those expectations for costs to be cut, but also the expectations that these companies would be investing in, you know, this new technology and trying to push it forward, and probably need, you know, the talented people, all the talented people they can get to try to do that stuff. Do you think that Alphabet is doing enough at this point on the tech side of things, on investing, on trying to catch up a little bit? Because at first it did seem like Alphabet was falling a bit behind on the AI side of things. I know we haven't been really in this, chapter of generative AI for that long, but, people like to write the story pretty quick.
Yeah, absolutely. As in, think about the roller coaster of a 23 that Google had starting from January, February, when people thought the search is going to be disrupted forever. Then came along April, May, when they had their big AI conference or the cloud conference. People had a big sigh of relief. And now, again, afterwards, people thought that search could still be disrupted, or YouTube could be disrupted, or the way we consume media on the internet is going to be disrupted. And now here we are, where Google is spending more to just shore up their revenue base is what investors are worried about. So again, I think that roller coaster that we had in 23 probably continues into 24, and Google is caught between whether they invest to build out their moat even more in AI, or do they give the profitability that investors are kind of waiting for. So I think this is the dilemma. This is the kind of tug of war that Google is going to face as 24 progresses, and that's why we think this profitability versus growth conundrum, we won't have a resolution for Google this year.
So, Rohit, when you're thinking about the shares, I mean, we're watching them in after hours, but over the past year, Alphabet shares are up more than 50%. What sort of reaction do you think investors will, give to these results? I know we tend to go with the knee-jerk reaction that we're watching just now, but when people get to a chance to sort of digest things, how do you think it'll play out?
When all is said and done, by that what I mean is in the next, call it 3 to 4 days, once we have clarity about other big tech earnings and other sentiment drivers into the economy, I feel Google earnings wouldn't kind of screen as bad as the reaction seems to indicate right now. They were in line to slightly below expectations, a bigger yellow flag in margins, but overall I think on any weakness of 5 to 6% on a company like Google, we would be buyers of those shares tomorrow morning.